Welcome to Java. Thank you for joining me. It is November 15th, 2024, and it is also Friday. So looking forward to a weekend. It's been quite the week. Thank you so much for staying with me here. There are a lot of things going on still in the background. So just want to say we've got a lot of opportunities coming in here. I'd like to help with the understanding and putting this all together, what we're looking at. So love my bears, love my bulls. Let's go into what's going on, starting with our favorite risk indicator, of course, the MMRI. Now we're at 293, still rising slowly. Today, really, as I was speaking about yesterday, was due to the dollar. Today, pulling back slightly, but there's still much more to the relative dollar strength. Now, the dollar in general is still weakening. We've still got inflation going on. Talk about that more in a moment. Going to the fear greed meter has pulled back slightly, showing a bit of a pulling out of the markets by mostly retailers over this last week after showing some surprises. Now, volatility is great for those that know what they're doing. That is the disparity that you can trade. And as I was saying, that gives opportunity for both bears and the bulls. This week has been no exception. So we've got what's coming out here, a surging US dollar, hammering emerging market stocks and metals. They're talking about the overbought dollar could lead to trend change and bring us towards the recession that many are looking at. So a stronger dollar will pressure stocks and also is pressuring the price of gold of late, as it's much better to go into the asset that is gaining strength. So the dollar hasn't had a day in some time. So with this, we've got the 10-year yield also rising. These both are telling major stories in the back end of what is going on with our economy and also global trade. So we'll talk about that a little more in a moment. But first, cryptocurrencies have pulled back. Now, they briefly touched 94,000 for Bitcoins. That's all-time high. It is now just below 90,000. We'll see if this holds. There is a possibility showing a bit of weakness in the charts. I'm showing really strong support at 74,000. Just to let you know, that is a possibility. We only deal in probabilities. I don't think it's going to get there anytime soon unless we hit this recession that everybody else is speaking about. So what's happened the past couple of days, we got our inflation numbers and both of them are ticking up. So wholesale inflation also a lot higher than they expected this month, not by a tremendous amount, but enough to pressure that the Fed cannot cut rates as easily as the market was thinking that they could. Now, December is the next rate cut. They were putting even a half point on the table. Now they've kind of gone towards a quarter point cut. We'll see. But as the easy money might be slowing down, markets are under a bit of pressure. So at market open, looking at more pressure, as well as the futures also saying the same. Now with this, we've also got behind it the relative strength of the dollar pulling back a little bit. So that's giving more room for gold. As I was saying yesterday, gold hit a support level and not disappointing. It's kind of hovering where it's at right now. Volatility index also up. So this is showing kind of that edginess coming back into the markets. So with this, we've got crude still under pressure, under the 70 mark, but above 75. So kind of in that chop, no trade zone, so to speak. So I have put this here. This is foreign exchange rates. So we have, these are different foreign currencies and their relative strengths. We've got the euro, Japanese yen, which is down, the Great British Pound, the Australian dollar, as well as the relative strength of the United States dollar. Now, the interesting thing to note is the inversion. Now, just like you have an inversion in yields. Now we've got an inversion in currencies between the euro and the Dixie, which is the dollar measurement. So this causes a lot of troubles in the background with trade balances, as well as a lot of our Western trade, what is going on with energy trades here. So this is something major to watch out. Hasn't happened in a long time, but the relative strength of the dollar is going to cause an issue for many other countries right here. So slowing down a bit this morning, which is a good thing, in my opinion. So um, although we are talking about inflation and we're talking about the strength of the dollar, all that means is that it's inflating in other countries faster. So now the United States is exporting their inflation at a faster rate to more countries rather than watching inflated prices at home, at least as rapidly. Still 2.5%, 3%. So you're still losing on your cash if you don't have it invested in something with a better return. Now, going to the calendar, we have Friday, some numbers coming out. We've also got Fed presidents talking retail sales. It's not anything in a huge capacity that we're watching coming out here, rather than Feds. So, few stories that are also going on behind the scenes with the currency trades, but is related. We're watching banks looking at bank business to business payments, bank to bank payments with the rise of crypto. So they're all beginning to incorporate into their longer business plans cryptocurrencies and the changing methods that they have behind the scenes. So we are talking about Swift payment systems. We're talking about all of these payment systems. They're looking at changing payment firms, real-time payments and clearinghouse discussions. They met this week. Now, this is a major banking change, talking about the Fed now. And of course, what we're looking at that affects us the most is that they are going to CBDC, central bank digital currencies, and the programmability will come later. This is going to be one of the most disruptive changes to payments and monetary systems in decades, at least, to say the least. So, a couple of stories. The vaccine makers, the top five, took a major hit yesterday as they announced that RFK Jr. would be the health secretary. So, he is an attorney, has been known in the past to go after corruption in major companies. So we'll see what he does. But hit these stocks in a major way yesterday, which I can't say that I'm sad about. So we've got US regulators also planning to investigate Microsoft's cloud business. So still kind of putting pressure into big tech is what we're looking at. More monopoly accusations, more of these going along with the Mag 7, now the Mag 6. So few other things I would like to discuss, and this is going back into this currency trade because I cannot express how major this is in the background and how it is going to affect all of our daily lives, whether you're in the United States or the West abroad or a different country. It will affect you. We've got commodities on cliff's edge with the United States trade deficit. So there's two sides to this. The United States trade deficit, we were speaking about this in the Discord group, and I spoke about this yesterday. It can be an asset for the United States because they have the ability to manipulate the pricing on their deficit. They can also affect the timing that they create these payments to other countries. And the main deficit holder is China. Now, the United States decides to settle their debt all at once, could flood that market either one way or another, or hold on to the debt and change the rate structure. So if you'd like to know more about this mechanism and how it works, join us in the Discord group, or we'll have a speak about this later, because this is larger than the shift to the BRICS in the background, and the central bank digital currencies will heavily affect this. So I cannot stress this enough. So what's going on here? Again, I have put this here, the different currencies, because the deficit, the largest deficit the United States is to China. Okay, not very many people are speaking about this now, but you will be hearing about this later if this continues. I can almost assure you, because this affects the numbers to the GDP as well as other trade growth. So we've got Japan third quarter GDP slowing as expected. So they're not creating shock because they're saying it's expected. They knew it was coming. China industrial output growth below estimates. We've got UK GDP growth disappointing. Irish economy forecast to contract slightly. So all of these together is not just one. We've got recession in the winds, and the foreteller of this is that gold has held its value, even though it's taken a hit the last couple of days. Hasn't been as much as it should be. The reason it's been taking a hit is because the dollar has risen. It's a dollar denominated asset. So we are not watching gold go down, but rather the strength of the dollar temporarily. So urging caution in a lot of these trades. I'm bullish on gold, short term and long term at these levels. So moving to cryptocurrency, we've got Tether introducing Hadron real world asset tokenization platform. Why am I bringing this up now? Because it's not just CBDC, but we're tokenizing these deficits in the trade as well as the commodities. This will have an effect as well. It means that these will all move now at lightning speed. The settlements could move at lightning speed, and therefore the effects to the global markets, whether it's the recessions, whether it is rate changes, or to your currency devaluation. So all of those are on the chopping block, and I just want to bring that up as what is hitting the risk factors, and these are hitting at magnitudes. So with this on the other side, we've got Iran and Qatar discussing expansion of their trade ties. Now Qatar has been in with Middle East larger trade group, and also having discussions between uh, the ceasefires, the wars, if you will, and helping with these discussions. So economically, all of these tied in. This has an effect with that as well. We've got Russia and Ethiopia are boosting their economic ties. So we're going to watch a lot happening here, because what happens, all wars are bankers' wars. And between these trade deficits, the agreements, and the money that is being made in the background will affect the treaties coming forward, therefore the peace agreements. Now, I'd just like to remind everyone that we are in a war economy, and if these treaties do break through, then it will have to shift to a restructuring and reconstruction of all of the areas that have been damaged. Otherwise, the GDP for the United States could drop significantly. So a lot of moving factors at play, and they all have their ripple effect. So with this, wish you all a wonderful day, wonderful weekend. I also have an announcement. I will likely not be making a video Sunday. We'll still try to, but it's looking like the chances are very low. So I wish you all a wonderful weekend. And until I see you again, my friends, stay free.